When it comes to taxes, everybody knows that you can get a deduction for your business-related travel, right? I'm not here to teach you what you already know. But what a lot of brands don't know is that if you're planning your trip correctly, and there's also a portion of a vacation, you may actually be able to deduct those expenses as well. But it all depends on how you plan it. So we're going to cover quickly what you need to know in order to be able to get a government-subsidized vacation while you're on a business trip. Now, a few things to keep in mind. The first is, in order to be able to get any deduction, you need to be away from your main business office for at least one workday. So the trip is going to be longer than one workday. Now, the second aspect has to do with the amount of time you spend on that trip related to business. Here, the rules are different if you're traveling in the US or if you're traveling internationally. Now, if you're traveling in the US, you need to spend the majority of your time on business-related activities. So that means if you take a 7-day trip, you want at least 4 or 5 of those days to be spent on business-related activities. Now, what's great here is that the days you travel are also considered to be working days. So, for example, if you're traveling Wednesday and you have a business activity on Thursday, and then you travel back home on Friday, all 3 days are considered to be work days. Now, where's the vacation coming, right? The way to be able to build vacation into this as well is that when you have your vacation scattered in the middle of your business events, in the middle of your business activities, then you can stay for those vacation days also and still deduct the cost. So for example, if you travel somewhere on Wednesday, you have a business activity or business meeting on Thursday and on Friday, and then Saturday and Sunday, you're staying on vacation, hanging at the beach, and then on Monday you have another meeting, and on Tuesday you fly home. You just got an entire week's worth of a business trip with 2 vacation days built in, and that entire trip is deductible. That creates a system where you're actually being able to utilize your time and your business trip that you're taking anyway, build in some R&R, and optimize your deduction. Now, when you travel internationally, the rules are a bit different. Internationally, it's actually a bit more flexible. You only need to spend at least 25% of your time related to business. If you spend at least 25% of your time, you can deduct the full trip. If you spend less than 25% of the time, you can still get a deduction, but it will be reduced. So for example, if you're only spending 15% of your time on business, you can only take a deduction for 15% of the expenses. The last point that you need to know is that the expenses have to be ordinary and necessary for your business. So first of all, that means you need to have a real business purpose for taking this trip. This is something that the IRS is sensitive to. I'm not suggesting that you be super aggressive about this, but if you're going on a business trip that you need, there's always a great way to optimize it. So you need to have a real business purpose, and the expenses have to be reasonable. So stay away from the presidential suite. Don't rent a Ferrari as your rental ride to ride through the streets of Vegas. But as long as things are reasonable and you're there for a business purpose, there's no reason why they shouldn't be deductible. Now, the next question is, what expenses can you actually include in your deduction? So it's all the usual ones, right? You have all your travel expenses, which can be flights, it can be rental cars, it can be Ubers, Lyfts, any transportation itself, all of that is deductible. Then you can also deduct all of your lodging expenses. So hotel, Airbnb, anything like that. In addition, when it comes to meals, the general rule is that you can deduct 50% of your meals while traveling. There are some exceptions, but 50% is a general idea. Any essentials that you need while you're on your business trip, such as laundry, dry cleaning, Wi-Fi fees, anything like that can be deductible as well. The last point I'll cover is what happens if you want to travel with somebody, a significant other, a friend, a child. When you're traveling with somebody and assuming that they're not an employee of the business, then you can still deduct anything related to your expenses, but you won't be able to deduct anything related to your companion's expenses. So their flight will not be deductible. If you need an upgrade from a single room to a double room because of the fact that they're coming, you can deduct the price of a single room, but you won't be able to deduct the upgrade fee. So again, just be reasonable, don't be too aggressive, and you should be able to build in your days of vacation while you're on the trip.